some really good questions here around some different scenarios with the real estate agent. So let me just list the questions first and then let's break them down. So in which scenarios would the real estate agent like to sell the property off market? Sell the property in a market via normal sale, say through realestate.com or domain.com or even the advertisement on their window. Sell the property via an auction, such as, via an open negotiation. And can I potentially explain those concepts and more importantly, I guess the differences or the why. Why would a real estate agent do those things? All right, so let's dive into those closely. Firstly, let's go into why the real estate agent would like to sell off market. And I think to answer that question, we've really got to define what is off market, right? So when a real estate agent is looking for a listing, they might be calling through a phone book. They might have a little old granny walking into their office down the road and say, hey, would you like, can you sell my house? They would go through a process of, I guess, pitching that vendor, presenting them to them comparable sales and, obviously reassuring them of their potential for success. And then they would sign a contract to represent that vendor and then list the property for sale. Okay, so up until the moment that contract is signed with that sales agent and vendor, the property is technically off market. The moment that it is signed, it is then on market. Okay, there is an agreement to sell that property with that sales agent. But the property is obviously not advertised for sale. There's literally a contract that's just been signed. They haven't put a sign up out the front or any of that going on. So it is technically on market. But at that point, I guess it's called what we, you define in the industry as pre-market. It's not technically really on market because no one else knows about it yet. They're literally just finishing their cup of coffee in the lounge room. It is now what we would call pre-market. And there's usually a couple of weeks where that property is in that pre-market state where they are, getting the property ready for sale. They might be cutting the hedge, they might be putting some paint on the walls, they might be doing something a little bit more substantial, and it might be a few weeks into months before the property is prepared for sale. Okay, they'll be preparing advertisements, taking photos, getting the online listing ready, and then they might wait a couple of days to list the property on the optimum day of the week. Maybe a Tuesday leading into a Wednesday or a Thursday open, maybe even a weekend open. So there's usually that couple of week period where they get all of the ducks in a row before the property is really advertised above the line, on market. So we've definitely got those three stages: off market, pre-market, on market. Now, when you purchase a property technically off market, it's before the real estate agent has signed on the dotted line. So your question was around why would the real estate agent and potentially the vendor sell the property off market? Well, the real estate agent would never sell the property off market because they haven't got a contract that's signed with a vendor that they get a commission. Okay, so they would never sell a property off market. If you want to buy a property off market, you have got to go and knock on the door with that vendor and say, hey, love your house, can I buy it? And then you enter into a negotiation directly with that vendor, and then you are then technically buying that property off market. No one else knows about it. It hasn't been a sales campaign. You and the vendor are dealing directly on that sale. But when the property goes into the pre-market state, there is a real estate agent, a sales agent now attached to that sale. You potentially could negotiate with that sales agent and purchase a property in the pre-market state. And I think that's probably the most common scenario that we're talking about as a property investor when it is not an on-market purchase. And that would be, you're talking to the Mr. Real Estate Agent, you're letting them know, look, I am looking for a 3 or 4 bedroom house in these suburbs, in these particular streets. I've got this to spend and I want this yield and block size. And you can be as specific as you would like. You can indicate to that sales agent you're a very motivated and strong buyer. You're not going to stuff them around. I'm very professional. A lot of other things that you can demonstrate to them. You can move quickly, very favorable terms for contract, etc., etc. And then the sales agent has you in the back of their mind. Now, they might have a big database of people looking at selling their properties, and they've talked to them in the past. They're umming and ahhing. Do I sell now? Do I sell now? Not sure. Let's wait and see. The real estate agent might look at what you're trying to buy and they might go, the person I talked to 4 weeks ago there, I haven't heard from them, but I might give them a call because I think I've got a very qualified buyer here, and they might now get over the line and sign on the dotted line to sell the property, and becomes then pre-market. So the sales agent might think it's a real positive thing that they have a very serious interested buyer with a very defined brief that they can then go and use as leverage to get that vendor to sign on the dotted line and actually put the property on the market. Or on the flip side, they might have 6 or 8 or 10 pre-market properties that are in that couple of week window, and because you have a very exact brief, they know you're going to move quickly, they might show you one of those pre-market properties before it jumps on realestate.com in the hope that you might have like the property and purchase it very quickly. And so why would the real estate agent like you to buy that property quickly in the pre-market stage? They would like you to do that because a lot of them are lazy. Okay, a lot of them are very bad agents. A lot of them want the money and they don't want to do the work, so they'll much prefer to sell it quickly and easily before they have to do any, open homes, listings going on and on and on, and broad negotiations. They are not very good real estate agents. And that's, to be perfectly honest with you, the majority of the industry, I would hazard to guess, would love the idea of a pre-market sale because of the fact of the little work that it requires them to do. Remember, the difference between $500,000 and $520,000 for them might only be a few $100s in their commissions, and then that's probably split 50-50, if not slightly more, to the principal of the real estate agents. So really the dollars in the pocket at the end of the day for a sales agent to hold out for 3 or 4 weeks for that extra 20 grand, it might only be a cheap dinner out, right? So for them, the idea of a pre-market sale, done and dusted, off the books, it's absolute gold for them. Why would the vendor, I think more importantly, be interested in a pre-market sale? They might be very private individuals. They might not like the thought of having their neighbours know the property's on the market, or their family. They might not like the idea of people walking through their home en masse in public open homes. Okay, the property might not be really in a condition to, warrant a public showing. Okay, it might just need so much work. It might be in an unlivable or dilapidated state. People it's not safe for them to walk through it. It's not safe for them to see it. It's really not presented very well. Sometimes you see compromise listings like that, as pre-markets. And I have seen them be pre-market listings for many, many months. And that's usually a sales pitch from the sales agents to sell substandard dwellings. There is something wrong with them. And if it went out into the open market, then it's going to quickly become very evident when you see people traipsing through the property, talking, comparing notes. They're getting builders involved and all of this type of thing. So I definitely have seen vendors and sales agents use the off-market, pre-market sale technique for compromised dwellings. They're trying to hide something. So you really do need to, dig between the weeds to find those diamonds sort of sitting there sometimes. Now, there are different legitimate reasons when pre-market can work. The vendor might be motivated to sell. Okay, they might not be having, they might have been sold, by the sales agent. They might be, don't have really that higher expectations for the property and for the sale. We might see fair market value at 500. The vendor might think if they get 450, they'll be really happy. And if you come into the pre-market environment without any other offers on the table, anyone else really seeing the property, and you offer them 475, well, they've got a great deal and you've got a great deal. You do have the benefit of negotiating in that scenario in a vacuum, really with not many other offers or options for offers on the table. So sometimes you might get a great result in an off-market environment and the vendor thinks they have got a good result as well. Right? They are interested in a quick sale, a nice seamless sale, etc. Most of the time you have to come in pretty sharp off market. You only really have one chance to go back and forth, usually with a negotiation. You are usually coming in at the appraised value or a fair market value for that property. To get it done, think about the leverage. If the vendor doesn't like your offer, then they'll go, don't worry, I'll go and pay the $2,000 to list it on realestate.com. I forgot to mention, that's probably the other motivating factor for a vendor to sell pre-market, is that they are saving on advertising costs. And that might be $1,000, $2,000, $3,000, $4,000 plus in advertising costs. It really is a thing. Okay, so probably that's running through the process. Look, how do you find off markets? It's not rocket science. You go and form relationships with sales agents. You might have looked at a property, talked to them about it, you missed out on it. And then you let them know, look, I am looking and very serious and, very easy to deal with, very motivated buyer. I'll be very professional and move quickly. Can you start showing me these properties in a pre-market state? Okay. How many properties sell like this? So if you think, well, the days on market in this area is 4 weeks, right? The average days on market for an on-market listing where we can track that is 4 weeks. And you remember that for every property that goes on the market, there's usually a 2-week period where all of the ducks are getting in a row, they're preparing that listing. That might be 2 weeks, and then it goes on market for 4. So you do the rough numbers, 1/3 of properties potentially are offered for pre-market sales. And then you think about those 1/3 of properties, not all of them will be purchased before they go on market. There might be a negotiation, the vendor might not be happy, he goes, let's just put it on realestate.com. But you have to think quite a decent chunk of those are selling pre-market, maybe 50%. It's hard to tell. I'm not the best person to be asking. But we could be talking about a scenario where 1 in every 5, 1 in every 6 properties in these heated markets are selling pre-market. All right, so there is a definite separate economy operating in the background. Are they any good off markets? We probably purchase 1 in every 10, 1 in every 5 properties off market, okay? And that is as a buyer's agent company, because we get presented a lot of off market properties that just don't stack up, right? When a property is on market, you might have 3 or 4 weeks where the vendor is lowering their expectations of a result and their distress is building. So sometimes you can use the sales campaign as leverage to get a better deal. Pre-market, not so. You also have to do your due diligence and be very, very comfortable with it, because you don't have the market and the sales campaign giving you feedback. Okay? You're running blind. You've got to be very, very careful with your due diligence. And we see a lot of dud properties presented to us as off market. And to be perfectly frank, as a business, we are, have built things from the ground up to be very, very good at looking at tens of thousands of on-market properties and finding the best all across the country. And it's very difficult to do that. It's very difficult to look at lots of properties and filter it down very quickly using human touch, not just numbers, but actual due diligence on the ground and on the computer. Okay, so we're able to do that very easily and very well, and therefore the properties that we do find on market are typically a far higher standard when we do our, cash flow and growth calculations than the pre-market properties and opportunities. Okay, so whilst we do find them and we do work with them, primarily our focus, the best deals traditionally for us have been on market. And if the right deal comes up off market, we would definitely pounce, or pre-market would definitely pounce. How would you find them? I've told you, have a chat to the real estate agents, the sales agents, get on their books. Let them know. You have to move quickly. You have to be professional. You have to be jumping on top of it. Are pre-markets the be-all and end-all? Definitely not. You've got to think that it's good to have an idea of them, but sometimes you've got to wait for the property to go on the market before you really want to get serious about the negotiations. So why would the sales agent, the vendor, go into a normal sale? Potentially a fixed price listing, offers over. Well, they want to get the broadest, exposure to the largest number of buyers, both in the local area and across the country. It's just very simple supply and demand, okay? You've got to be able to market the property correctly, and then as big part of doing so is listing that online, is listing it in the corner shop, having an open home, and putting that property in its best light. So that's obviously the traditional way properties are sold, and I probably don't need to go into the reasons why in more detail than that. Why would someone sell via an auction or open to negotiation? And this is an interesting one because in different geographies across Australia, auctions are very popular in buyers and sellers markets, and in other geographies, they are very rare in buyers and sellers markets. And I'll give you an example. Sydney is an area where when the market is booming in Sydney, okay, every property seems to go to auction. And in reality, it's 80 to 90% of all properties in core suburbs of Sydney are going to auction. right? And that's a huge number. We're down here in Tasmania, potentially sort of places like WA, yeah, I'd probably say WA would be another one where it's rare to see auctions, and most regional locations rare to see auctions. It might be 1 in every 10, 1 in every 20 properties does go to auction. Now, in the general markets, in Sydney, lots of people go to auction because I think it is a culturally acceptable way of selling properties. You generally would do that. You'll generally go to auction when you feel like there is going to be a lot of demand for that property, right? Remember, if you are a vendor and you're selling your property via auction, you're generally only going to get $1 more, in a perfect world, than the second highest bidder. So you might be leaving some money on the table because of the way that the auction is structured. But generally in Sydney, they've made auctions a bit of a sport. Culturally, it's very common and accepted way to sell properties. Also, Sydney's generally a heated market. So whenever you have a lot of interest on a property, or whenever and I'll get to this in a moment, whenever it's very difficult to value the property, putting it into an auction scenario helps you get the maximum price. It gets the most amount of interest overlapping each other, and potentially getting that feedback from the market about what it is potentially worth. So let's just summarize. Why would people go to auction with a property? Geography, culturally accepted. It is the relevant or the most common types of ways to sell a property on market in that location. Or generally in the other markets, where it is less common for properties to go to auction, you generally see very unique types of properties go to auction. This might be something on a corner block with a commercial property on it, or a really old mansion, or large estate, or a very unique type of property. Where the vendor and the sales agent are scratching their head going, what is this worth? Or they've got a lot of diverse and varied interests. They've got people knocking it down. They've got, people who want to operate in the commercial property as a going concern. You've got investors. You've got owner-occupiers. You've got this very broad mix, and you're really struggling to work out what their willingness to pay is, or you have a very varied willingness to pay. So we typically see these very unique type of properties going to auction because the valuation of them is very difficult, or there is a lot of demand for them, and you're going to have a lot of overlap in the auction process. So look, I've given a really long answer there. Hopefully that's been beneficial for you to understand. Typically, and I will say, as a company across many hundreds of millions of dollars worth of purchases, we have never purchased at auction. Not once. Okay, and the why is that? It is because we, as a company, have the same amount of leverage, potentially in that open auction environment, as the mum and dad unskilled negotiator next door to us. We just don't have the leverage. And also, traditionally, we are buying in investment grade locations, in capital cities and across Australia, where generally auctions are less common. WA, buying a lot of properties in WA at the moment, and it's very rare to see an auction. And when we see an auction, we just think, well, hang on, can we purchase that property prior to auction or after the auction? But we won't be sitting there with, Joe Blow and mum and dad down the road in a similar competitive environment to them at the auction, sticking our hand up. Because we don't have the same leverage as a professional negotiator, we have to control our variables. That is not control. We lose the control in that auction scenario. We will control our variables prior or post-auction, not during. And I think that's a really interesting distinction. So hopefully that's useful there around the different types of offer scenarios. Let us know. It'd be great if you guys can, even make some comments. What do you prefer? Any thoughts on that? And any trends that you're noticing in the potential local area.